The ongoing trade war between the United States and China has become a dominant feature of the global economic landscape. While various metrics can offer insights into its impact, gross domestic product, GDP growth is often cited as a key indicator of which nation might be faring better amidst the escalating tensions. Analyzing recent GDP figures, however, reveals a complex and evolving picture, far from a clear victory for either side. Over the past 2 years, both economies have demonstrated varying degrees of resilience. In 2023, the U.S. economy showed robust growth at 2.9%, while China expanded at a respectable 5.2%. Looking into 2024, estimates suggested a slight moderation for the U.S., 2.8%, and a similar pace for China, around 5.0 to 5.4%. However, recent data into 2025 paints a more dynamic scenario. The first quarter of 2025 saw a surprising contraction in the U.S. GDP by 0.3%, the first decline in 3 years. This downturn is partly attributed to the trade war's disruptions, including a surge in imports ahead of tariff hikes and subsequent trade volume reductions. Conversely, China's economy recorded a strong 5.4% growth in the same period, potentially buoyed by pre-tariff export surges and domestic economic policies. The latest escalation, with the U.S. imposing a massive 145% tariff on most Chinese goods and China retaliating with 125% tariffs on U.S. products, has further complicated the picture. The immediate consequence is a significant drop in bilateral trade. U.S. retailers are bracing for potential shortages and price increases, while Chinese exporters face the challenge of finding alternative markets. The initial GDP figures for Q1 2025 suggest a short-term advantage for China, but the long-term effects of these steep tariffs remain uncertain. Forecasting the ultimate winner based solely on GDP is fraught with challenges. While China's recent growth appears stronger, sustained reductions in exports to a major market like the U.S. will likely create headwinds. The U.S. economy, while experiencing a recent contraction, benefits from a large domestic market and the potential for businesses to adapt supply chains over time, albeit at a cost. Furthermore, the trade war's impact extends beyond simple trade balances and GDP figures. Factors like inflation, business investment, technological competition, and geopolitical influence are equally crucial in determining the long-term consequences for both nations. Therefore, while GDP offers a snapshot of economic performance, a comprehensive assessment of the trade war's victor requires a broader analysis encompassing these multifaceted dimensions. To gain a more in-depth understanding of the U.S.-China trade war's trajectory over the next year, several key areas of analysis beyond GDP growth will be crucial. 1. Inflationary pressures. Closely monitor the Consumer Price Index, CPI, in both the U.S. and China. The steep tariffs imposed are expected to translate to higher import costs, potentially leading to significant inflation, particularly in the U.S. Analyzing the specific categories of goods experiencing the most substantial price increases will be vital in understanding the impact on consumers and overall economic stability. 2. Business investment and supply chain adjustments. Track capital expenditure and investment decisions by businesses in both countries. Increased uncertainty due to the trade war may lead to delayed or canceled investments. Additionally, observing how companies are restructuring their supply chains, whether through relocation, diversification, or regionalization, will indicate the long-term adaptations being made to circumvent tariffs. 3. Technological competition. Analyze developments in key technological sectors like semiconductors, AI, and telecommunications. The trade war is intertwined with a race for technological dominance. Monitoring export controls, research and development investments, and the emergence of new technological standards in both countries will reveal the shifting landscape of innovation and potential decoupling in critical technologies. 4. Geopolitical implications. Assess the broader impact on the relationship between the U.S. and China and its influence on global alliances and trade norms. Observe how other nations are navigating the escalating tensions and whether new trade blocs or multilateral agreements are emerging. The weaponization of trade and its impact on international institutions like the WTO will be a crucial aspect to follow. 5. Consumer behavior and retail sector. Monitor consumer spending patterns in both countries. Higher prices due to tariffs could dampen demand, particularly for imported goods. Analyzing retail sales data and consumer confidence surveys will provide insights into how households are reacting to the changing economic environment. Definitive conclusion. as of May 2, 2025. Based on the current data, declaring a definitive winner of the US-China trade war remains premature and overly simplistic. While China's GDP growth in Q1 2025 outperformed the contracting US economy, this offers only a short-term snapshot. The long-term consequences of the unprecedented tariff hikes are still unfolding. Currently, the US economy appears to be experiencing more immediate negative repercussions, with a GDP contraction and the looming threat of significant inflation. However, the resilience of the US domestic market and potential for supply chain adjustments could mitigate these effects over time. China, while demonstrating near-term growth, faces the challenge of adapting to drastically reduced access to the US market, a crucial export destination. Over the next year, the areas of analysis outlined above will provide a more nuanced and comprehensive picture. The true winner will likely be determined not solely by GDP figures, but by which economy can better adapt to the disruptions, manage inflationary pressures, maintain technological competitiveness, and navigate the evolving global geopolitical landscape. At this juncture, the trade war appears to be inflicting pain on both sides, with the potential for significant long-term structural changes to the global economy. This content is designed to help you think critically about the issues. Add your comments and don't forget to like and subscribe.